here's a overview of the course, what we're going to cover, just kind of a summary, but overview. We'll be going through a lot in this course. So it'll be starting next Saturday, but then Monday the 25th, so 11 to 2 Eastern Saturday. Then we'll finish at 4 to 6 on Monday, and then a follow-up Q&A the next day. So I always like to start out with the option Greeks, how to use them for your trading edge. Plus, the bonus in this course is you're getting my Option Masters course, is just more focused for Greeks, so you're going to get a lot more in that course as well. So how option pricing works, it's used for selecting the best option strategy. So really want you to know the foundation and fundamentals of options, and then how to use standard deviation to use for your probability analysis for forecasting your price. So I'll explain it really kind of in layman terms, how to use it so you understand it real easy, how to use your option and your trade delta probabilities, how to use that to quickly assess probabilities in the market, and then how, why, and when to take advantage of volatility and volatility skew. We'll go what that volatility skew is. There's a positive and negative skew. So we'll go through the importance of that, how that works for your option trade setups. And so this, again, this is a master's course. You're going to learn so much about these various different spreads, but not only the spread, you're going to learn when to use the spread and then how to best use it. Then we'll go through the option strategy guide. So this is the process guide in more detail. So for selecting which strategy to use. So it's going to be, again, we're going to go through more on the market cycle, how to determine market cycle. I'll show you the rules that I use to determine market cycle. And then how to assess market environment. So we're going to do a kind of a market assessment on how to identify extreme, mid to high level uncertainty of the market. That's part of the process. And then the chart patterns. So the chart patterns are very important. So we'll go through the 5 chart patterns as well. All right, so then we're going to go through the option selling strategies, the best ones to use, what they are, how to use them. Option buying strategies, what they are, how to use. The option butterfly, really amazing, takes advantage of that high volatility, selling time volatility. We kind of briefly covered that. The option strategy can provide returns again of 100 to 1,000% return. That's why they're really amazing. And then the trading advantages of the long option long condor. Okay, so we're going to go through that. So we're going to go through each strategies in detail with lots of different examples. And then when I hedge, we'll go through the hedging process. The first step is to use, I usually try to hedge into a long option condor first. And we'll go through why that is and how that works. And then how, why, and when to use the long condor for your directional trades. Then we're going to get into the calendar spread. So it's a timing income spread, when to use and how to use. And then the next progression off the calendar is the counter diagonal. Now we tend to do a lot of these, as you can see from the summary, which we'll go through in a minute. I'll show you the breakdown. So these are your medium to longer term directional timing income type trades. So the great thing with the calendar, while we use them so much, is the flexibility. So what we can get out of it is we can stay with a trade longer, but we can also really neutralize the risk and the time decay component with that short duration option. So it's defined risk trade for income if we need that income while we wait, but it gives us that potential for the big profit from a market direction breakout, either up or down. So we'll go through how the structure works to profit from that difference in time and implied volatility, which is the skew. And then that's the skew is between the short duration and the long duration. So we'll go through all that. It might sound a little bit complicated now, but once you go through the course, we have more time and we'll really dive into the details of how it all works. So you understand that, the fundamentals of how it works as well. Extreme range band indicator is the same that you probably have by now. And then we're going to go into the options strategy favorites, basically when to use and how to use buying and selling options, the vertical debit spread, calls or puts, butterflies, long condors, counter diagonals. So these are my kind of go-to option spreads that I use, just long calls or puts, the vertical debit spreads, butterfly condors, counter diagonals. So we're going to cover those in great detail as to how, why, and when to use these, but also then how to use them for hedging. So we're going to go through another part of the course will be progressions of hedging using these option types of spreads. So then we'll go through risk management, how you can adjust and reduce your position, adjustments to in some cases getting that free trade like I showed you on IWM. So this is what we're always looking for, and I'll step you through what we look for in order to do that. So you'll get a step-by-step guide on that. There were some questions on assignment risk, expiration, auto exercise. We'll go through assignment risk, how to make sure you're not going to get assigned. So we're going to look at, looking at your intrinsic, extrinsic value, what to look for there. So you'll get, that'll be covered in detail. So you're not going to have that assignment problem anymore, plus a trading library. So go back and look at past trades, which really helped me as far as learning is look at past trades that you've done. So get all that.